What's going on, boys? It's time for another Sunday Stock Talk. You already know what it is. We're going to be breaking down all the top picks this week. We're going to go over what's hot, what's failing, what's flopping. If you guys are ready, let's pop a cold one. Let's get into it. Okay, so last week was absolutely crazy. We had GameStop go to the moon after the Wall Street audits took over Wall Street and pumped that sucker up with those diamond hands. We had AMC go to the moon. Even Papa Elon took part and pumped up Dogecoin. Dogecoin went crazy. Peeped the return. Quick side note, I made a bet with my friend. We both put 20 bucks into Dogecoin like back in June just for the heck of it. And well, we said if we get 1,000% returns that I'd get a Dogecoin on my leg just like his. So guess I'm getting a Dogecoin, which is pretty sick, but don't make bets like that. But for long-term investing, it's actually gonna make you some money over the next couple years, next couple months with some swing trades, some day trades, even some long-term holds. Let's actually talk about what plays we should be taking this next week, which picks are hot, which ones are probably gonna flop, and what you should be doing to maximize your returns this next week. So without further ado, let's get into it, guys. Okay, so the first one I want you guys to keep your eyes on that I'm watching closely, I have my alerts set above and below for, is VXRT. It's VXRT. And they're an oral therapeutics company that is trying to develop a COVID vaccine that's administered orally. And they ran up insanely over the past couple of weeks, but then they had not so good reports on their first trial, and it got beat down like none other, going from $25 a share all the way down to $7 a share in a matter of 2 days. So I see this as a huge opportunity to try to wait for this to kind of bottom out. And once we start to see the price go horizontal, meaning that it's just kind of consolidating in this area, then what you're going to want to do is you're going to want to set your alerts above and below to make sure that you catch the move. If it goes above, I'm going to start nibbling in. And then as it starts to track upwards, because there's going to be a second clinical trial that's going to be going out here soon, and I expect to see a similar run, pre-anticipatory run on this. And so I want to make sure that I'm getting in at a good price before the hype really gets priced into the stock. So you're going to want to make sure to set an alert above, probably I would say $9. And if we see a move upwards with good volume, then you're going to want to start nibbling in. Just understand that this is a very risky stock. Like you saw, it dropped 80+% in a couple of days. So it's very, very, very dependent on the news that is coming out. So understand that this is a very risky stock. Do your position sizing appropriately. For me, this is less than 1% of my portfolio, but I see it as a high return play. And usually these beatdowns are a big overreaction. So you can get in at a great price, get some crazy returns as long as these things line up. So keep your eyes peeled on that one. Another one that I'm super excited about is Wayfair. So it's symbol ticker W. This one ran up crazy about 2 weeks ago, early January. It is absolutely a monster. I already locked in over 50% returns on it, and I bought the dip so far. I know it's ran up a little bit over the past week, but I want you guys to keep your eyes peeled on this. If we see it go back and retest this $260 level, it's definitely worth scooping up just a little bit, waiting for confirmation for that direction to reverse, and trying to ride this back up to the all-time highs. This is going to be a swing play. So don't expect overnight returns on this. This is probably going to be something you're going to be holding for a month or so. This play makes up about 20% of my portfolio. I am pretty bullish on this. I think Wayfair is definitely here to stay. I think they're going to do very well, especially with the earnings report coming up here soon. You're going to get that pre-anticipatory run. It's going to be a great set of catalysts, cheap price, and the likelihood of great returns for minimal downside risk. Okay, so the next one that we're going to be talking about is Shift Technologies, SFT. Now, Shift Technologies is essentially very similar to Carvana, with the idea that essentially you can order your car online and just go pick it up from a dispensary. And they just opened up their second location down in Austin, Texas. I see this as a huge opportunity for them to report knock out of the park earnings. Their earnings report is coming up this week on the 11th, so I'm in on this one at about $8 a share. I'm hoping for a pre-anticipatory run. There hasn't been that much volume on this stock, and I think that's just because mainstream media hasn't caught on to it yet. I do think though that this is a great time to get in on the stock. It's had mainly horizontal movement for the past couple months, and something like this with a big catalyst, if they can smash earnings and get a little bit of that publicity, you might see a great return on this. Again, this is something that's smaller in my portfolio, probably less than 2% of my portfolio. I am very bullish on this, but again, it's a speculative play. It's a small cap stock. Understand that there is more risk to these types of stock. However, they do have a product, and that product is growing and scaling, which I see as a benefit. So it's about a 50-cent risk for the upside of a couple dollars, hopefully. So we're really hoping to see probably a 20 to 50% return on our investment. So stay tuned. We'll follow up on this next week to see how this played out. Okay, so the next one I am very excited about. You guys should definitely make sure to be paying attention to this. The next one is Alibaba. Their ticker is BABA, BABA. Now, recently they got beat down because there were some speculations that there would be regulations on whether BABA would be able to be traded in the United States anymore. With Biden being president and the improved foreign relations, I highly doubt this. I got in very early. I got in at $220 a share. After the beatdown, I saw this as a huge opportunity. If you guys wanted to hear about this opportunity in real time, then make sure you guys are subbed to my Discord. The link is down below. I call out all these plays in real time, all my buys, all my sells. Highly recommend it. But for this week, I really suggest that you guys set your alerts over $270. It's been consolidating in this price point of $250 to $270 for the past week and a half, and that was after previously consolidating in that $220 to $240 range 2 or 3 weeks prior. And so what we're seeing is this consolidation, some regain of confidence, and then a breakup, and then some consolidation. Right now, it's really tempting this 270 level. I have my alerts set there. I'm already in the stock. I don't necessarily plan on adding any more. It's already about 20% of my overall portfolio. I might add on a dip, but I already have such a great entry with enough shares that I don't know if I'm going to. But for you guys who aren't in it yet, I definitely recommend that you wait for confirmation, meaning that it actually breaks that price point and holds it, and then get in with a couple of shares at a good price. So hopefully on a dip, so maybe it breaks up and then dips down. That's where you'd want to buy, and then hold for the resumption all the way back up to all-time highs. I don't plan on selling this anytime soon. I really plan on holding it, and I think I have a great price point to hold this at, especially with where it's at now. If it can break this 270 price point, you might also have a great price point that you can hold for a very long time. I expect to see this up in the 320s here within the next quarter. So very minimal downside risk in my opinion, and a very good upside. So definitely stay tuned to this one. You guys are going to want to watch it closely. It is one of those companies that has great underlying fundamentals and a great technical chart. So I would not ignore this one. Okay, so the next one that I am really loving right now is Apple. Now, usually I don't invest too much of my money into these super big cap $2 trillion companies because you just don't get as good of returns. And right now, I'm focused on growth with a minimal focus on value investing. I do think it's important to have a good majority, probably 50% of your portfolio committed to value investing, just so that you make sure that you have your underlying value taken care of and that you're consistently going to be growing over time. I think it's important. Usually I don't have this much money in it, but right now I have a very large amount of money in Apple. Last week they had a pre-anticipatory run from 130 all the way up to 145, which was great. And then after earnings, which they killed, they had a sell-off. And this is going to be something that you see a lot in the stock market, especially if you're new, is that you buy the anticipation before the news comes out, and then you sell the news, regardless of if it's good or bad. Usually that's typically what happens, is that it will sell off just because there's no mystery in what that news could be anymore. It's known, so there's no anticipation behind it. So usually what you want to do is buy that anticipation and then sell the news, and that's exactly what we saw happen here. everyone bought the anticipation, that breakout over 130, and then they held and sold right before the announcement of their earnings. And then right after that, we saw a huge sink, just back to back, getting slammed 3 or 4% per day, all the way back down to 130. So if you look at the chart, this is a great support level for Apple, 130. And so I saw this as a huge opportunity to try to buy in and just start to add up some of those shares and get a little more a little more skin in the game on this. And so I bought some more shares there, and I've been riding it all the way up now to 137. If this dips again down to 135, it might be a good time for you to try to start nibbling in on this. I think that overall it goes unsaid that Apple is a great company, great fundamentals. They have so much cash in reserve. They are doing great. They are killing it. So this, to me, is one of the lowest risk plays out of all the plays that I'm taking. Okay, so the next one that I'm very excited about is Beyond Meat. Now, Beyond has been kind of all over the place recently. They just had a crazy short squeeze all the way up to 221, which is great. It was almost 100% return on my initial investment, so I'm very happy about that. And I was looking for a price to get back in on a majority of my shares. Usually what I do is if it starts to go parabolic like that, where it just takes off and there's just too much short interest, then what I'll do is I'll sell 50% of my shares, hold that 50%, wait for a dip entry, and then buy back in those 50%. That way I'm netting that margin, that difference between the top and the bottom. So that's exactly what happened right now. And so it's been selling off over this past week, and this is great. This is exactly what we want. We want it to sell off from that level and then find consolidation, meaning we want it to go dip down and then start to find a price point where the buyers and the sellers are happy. There's no push in either way. And so you're going to see horizontal price movement, and that's really important. So we're starting to see this over the past couple of days. I'm not 100% confident that this is the price point that is going to be holding, but I have nibbled in about 50% of my position sizing here. If we see a break over that 175 level, I'm going to go full position in anticipation of it going all the way back up to those all-time highs within the next month or two. Again, this is not a day trade. This is something that I'm holding over the next couple of weeks in anticipation of it going all the way up to the highs. But this is a little bit more risky, especially because of the short squeeze that happened on it. This value could be inflated, and so we may see a breakdown all the way down to 150, and if that happens, I'm going to cut losses at that bottom, which is called the support, which is roughly at 160 right now. So if it breaks below there, I'm going to cut my losses, and then I'm going to go ahead and buy back in once it, again, finds that horizontal consolidation price, which what it looks like is 140. So you're saving yourself about $10 per share in losses, and then buying back in. I'm probably going to hold 50% even if it does break down below there and just add because I am so bullish on this company. But on the off chance that this is the support level, I want to make sure that I have some skin in the game and actually pays off if it does go ahead and reverse and become a bullish movement. So definitely make sure that you guys have your alert set over 175 on this. You're not going to want to miss this move. It has potential to make a great return. So keep your eyes peeled on this one. Okay, so another one that I am really excited about is Palantir Technologies. Last week they got destroyed. They went from $45 all the way down to $30 a share, so a 30% reduction in their valuation. I saw this as a great opportunity to start to nibble in, meaning I'm not taking full position size, but I'm starting to just buy a little bit at a time until I see that confirmation. And I saw that it was reaching a support level at that $30 price point, and it actually was holding that price level. And so I started buying in a little bit, and then on Friday we saw actually a little bit of a breakout up to $35, and then kind of come back down to that $33 range. If you guys aren't in this already, see if you can get somewhere around that $30 price point. Obviously my stop loss is set right below that $30 level, so pretty minimal risk. There's a good upside, 50% return on this, assuming that it doesn't make new highs. I really like this company. I think that overall their fundamentals are great, their value is great, and so when you have that fundamental backing as well as a great technical chart, that is a mix for a great return. So you guys are definitely going to want to keep your eyes peeled on this play. Okay, and just a quick highlight on last week's play. MViz Microvision Technologies. I got in on them at $5 a share, and I've held them for probably the last month or so. And they have absolutely destroyed it. They closed Friday at $11.50, so over 100% return, which I am happy about. Again, this was probably less than a percent of my portfolio just due to the risk. Um, Kind of wish I would have put more in, but don't we all? Hindsight is 2020. But I actually cashed out on MViz. I'm only holding 50% of my shares. Like I said, when it starts to go crazy, I like to probably cash out on 50% of my shares, just mitigate some of that risk and try to capture some of that upside. So I'm holding 50%. I will probably buy the dip. So keep an eye out for a dip this next week. I expect it to come down probably to that $8 level. And so I'm probably going to add a little bit there, but I'm pretty happy with my position sizing right now. So if you're not in it, just keep your eyes peeled on it. It's kind of on the side watch list chart. Okay, so the last one that we have for you guys is a banger. It went crazy over these past couple weeks. I'm sure you guys have heard about it. But if not, it's CCIV. This is another SPAC. And so far they have ran like crazy after news that they might be merging with Lucid Motors. Now, Lucid Motors is a prospecting electric vehicle company that had a ton of ex-Tesla executives go over and start their own battery technology company. Eventually, they became capable of building their own prototype cars, and now currently they're looking to go public and get public funding under Lucid Motors with a possible merger with CCIV. So right now, this is purely speculation. There's rumors about this. There's a couple of key things that really point to Lucid Motors actually be merged with CCIV. But again, this is purely speculation right now. There is no definitive agreement like we talked about previously. So I expect when a definitive agreement comes out that this thing might run like crazy. Usually when definitive agreements come out, you could see a move up 25% to 50% overnight. So you definitely want to make sure that you have, just some skin in the game. Make sure that you're sized appropriately. For me, I know how hard electric vehicles have been running in the market recently, and how bullish they've been. I expect something similar with this, especially since Lucid is kind of seen in the market's eyes as the Microsoft to the Apple, kind of the direct competitor. And so I see this as a big opportunity. You definitely want to make sure you're in on this. Our team got in at $15 to $17 a share. So we've been in for this a while. It's been a banger, up over 100% on our returns already. I added personally down at that like $22 level again. And so it's been great so far. I also added last week at the $27 level. And so you can see I'm kind of adding on these dips in anticipation of this definitive agreement coming out. I expect to see something similar to how most SPACs behave, where when the definitive agreement comes out, you see this big spike, this big run up, and then a sell off. I'm probably going to sell probably 50% of my shares after that definitive agreement is announced and the runoff happens. And then I'll probably buy back in that same 50% at that consolidation period in anticipation of the merger happening. And then again, I'll sell 50% and then buy the dip again. I'm not sure though, with CCIV and it being an electric vehicle company with how much hype is behind it, we might not see as big of a sell-off. With Tesla, same thing happened. We didn't really see a sell-off when we were expecting it to after the S&P 500 inclusion, just because so many people were bullish on it and they held all their shares. This is a little different. They haven't had production numbers yet. They are planning to do 7,000 cars in the first year, which is not that great to be honest. And their scaling is not quite convincing right now. We need those numbers for me to really become an advocate of it and bullish on it. But the CEO just had a great interview, and what they were talking about is their plan is similar to Tesla's, where they're going to come out with these cars that are 100K to 160K per car, so a luxury vehicle meant to compete with the likes of Mercedes and Porsche. And then they're going to use that high margin return on these luxury vehicles to then go out and scale their manufacturing so that they can build more affordable cars. And that's really what's going to take them off, just like what we saw with Tesla with the Model 3 and the Model Y. Now they're up to, I think, 500,000 vehicles this last year, which is huge. So they're using a similar business model, which I think is smart. They even said that they're not trying to compete with Tesla, which is not sure how that makes sense. But they will also have autonomous driving as well. So they're basically a direct competitor of Tesla, and I'm all for it. You know, I think that in the market's eyes, this is their chance to get in on another Tesla, so to speak. And when they have that kind of approach to it, you can expect the numbers to get pumped up very quickly. Again, be careful on this. It's very volatile, so the price is all over the place. So if you are not good with volatility and don't know how to manage risk, don't play this. Maybe just buy one share just to learn how to play it. But make sure that you have an entry plan, an exit plan, that you have a plan for how you're going to scale in and out of your position, and what you're going to do if something, you know, a black swan comes and they don't merge with CCIV. What are you going to do then? These are all very real possibilities right now. Until that definitive agreement gets signed, it's up in the air. So make sure that you guys understand that risk and how big it can be, and use your position sizing appropriately. With that being said, I'm going to become more bullish on it as these things start to line up, as the definitive agreement gets signed. And after the merger, I'm hoping for a big sell-off, and that's where I'm probably going to go pretty ham on my position sizing. So I'll keep you guys updated on that in the next week's Stock Talk. But for now, that's it. This is everything for this week's Stock Talk. I appreciate you guys making it all the way out here with me and sitting it through. I hope that it was really informative and helpful for you guys. I spent a ton of time doing all this research on this, so I hope you guys appreciate it. If so, make sure that you guys are liking the video, subscribing, and turning on the notification bell. You guys are not going to want to miss out on this kind of stuff. Make sure that you guys are in that Discord tomorrow morning. I'm going to be sending out alerts on what I'm buying, on what I'm selling, how I'm managing these positions, any market news that's coming out. It's just a great way to stay up to date on what's going on. So with that being said, I appreciate you guys. Thank you for sticking around with me. I'm just going to leave you with what Warren Buffett said. The stock market is easy. Just don't lose money. And I think it's very, very simple, but very profound. Manage your guys' risk. That is the key to making sure that you're profitable. You know, when you have these stocks that run like crazy, that covers all your losses if you have losses that are small and well managed. And that to me is a big key. So I'm gonna leave you guys with that, let you guys sit on that, get your coffee brewing, and I'll see you guys tomorrow morning. Peace.